Hey everyone, Matt Muncher here with Established Roots Group. I wanted to introduce you to our newest video series called Expert Insights. In this series, Adam, Ray, and myself will sit down with experts from all different aspects of the real estate transaction, starting with home buyers. In the first few episodes, we'll sit down with mortgage expert Jefferson County and ask some common questions that we hear surrounding the mortgage and mortgage process. Episode 1 is going to feature a hot topic that many of us talk about, and that's interest rates. Check out as Johnson provides some information around interest rates and their importance to a real estate transaction. And also check back for our future episodes as we dive into additional parts of both the mortgage process and other parts of the home buying experience. Check it out. So this is Matt Muncher and Adam Ray with Established Roots Group here. We have Jefferson County from Loan Depot, mortgage loan originator,
branch
broker,
manager,
branch manager, all
titles.
the above. So, we wanted to sit down and kind of have a series where we were able to kind of explain some different questions that people ask us when it comes to buying a house. Obviously, when you think of buying a house, the number one thing you think of is the mortgage. How are we going to buy the house? So we thought that was a great place to start. Jonathan is an expert in the industry.
Some say.
Been doing it for many years.
Yep.
And most of which Adam and I have had a relationship since we both started as well. So wanted to sit down with him and kind of pick his brain on a few things. So Jonathan, I know the first thing that always comes to mind when we talk about money, when we talk about buying a house, is interest rates. Always. So that's the hot topic. That's the news headline. That's the Facebook post. So how important are interest rates? Are they as important as people make them out to be, or is that kind of blown out of proportion a bit?
Well, I mean, it's not blown out of proportion. I think it's important. And I was thinking about this the other day when we talked about the series. It's a really good measure when you're comparing the same thing. Like if you have two conventional mortgages, same closing costs, same deal, interest rate's your only difference maker. It's what dictates the payment.
Right.
But when you don't have the information, it's less important. And the reason being is a really good interest rate with a lot of fees, or a really good interest rate when you've got high mortgage insurance, you lose some of the benefits. So it's really important. Yes, it's a measure, and that's how the industry determines where the market is.
Yeah.
Watching the news lately, it's rates have come down and rates have gone up, a lot more up than down. But it's important, but it's a really tricky thing just to call a lender, and I get that question all the time, and say, what's your interest rate?
Right.
And the only answer I can give them is, I know what mine is. It's on my mortgage statement. I don't know what yours is.
Right.
There's things that go into it, and
Yeah.
so it's really difficult. But it's important. But it's not important in the way a lot of people think.
Right.
So when somebody asks me that question, your interest rate's based on several factors: credit score, how much money you're borrowing, the type of mortgage you're getting. So it's a factor. It's a part of the equation. But there's other things that go into it. So it's super important. Obviously, that's all you hear about. People don't talk about, mortgage insurance is going up or property taxes are going up the way interest rates do. So it's important, but it's also important just to make that part of the puzzle, because a higher interest rate with a lower payment, is that a bad thing?
Right.
If you can save money on mortgage insurance or FHA versus conventional, the interest rate's less of a factor. But it's really important when you're kind of comparing apples to apples, as it were. So